How's it going? Ryan here, and today I'm making a video going over how I find my levels on any stock chart. I'll be using SPY as an example, but this applies to any chartable stock. Nothing that I'm doing here is particularly special, not really any secrets. Usually I just look at support, resistance, I look at trend lines, and there's a few chart patterns that I might pay attention to. I'll dive into all of those, but we're going to start right here from the weekly time frame. So generally it's advised to do a top-down approach when you're charting a stock. What a top-down approach is starting at a higher time frame and kind of breaking your way down. So for example, here we are on the weekly time frame. Each one of these bars represents a week of trading or a week of price action. We're going to use this as our first stop, our super high level overview of where we're at, what the current trend is, where we could expect price to go, etc. The reason why we do this gives us a bit of an idea of what we can expect in the following days or weeks, but more so it gives us levels that we watch. As price gets close to those levels, we can expect a reaction or some sort of price movement in or out of those levels. So if we have a major support line on the weekly chart and it gets broken intraday, we can expect some movement to happen at that point. So really it just gives us large levels that have been respected over a long period of time that generally will influence price when price gets around those levels. One example would be this trend line that we've had on the weekly time frame. You can see if you draw this point from these two lows, so as we've had a downtrend here, we have a high, we have a low, a lower high, lower low, lower high, lower low. Kind of an anomaly on this little high here, but still not making a set of new highs and new lows. We form this lower low, so we have this lowest point here. We connect this to this swing low here and extend that outwards. And this level came into play recently. As you can see, we came down, tested it, formed these kind of reversal candles, closing above this trend line, which would indicate generally a reversal. When you have these types of candles at a support line, that generally means that you might see a reversal out of the area. It shows buyers stepping in, it shows selling slowing down. So you can see we've kind of popped off of that consolidation down here at that trend line, and this is why we look at these big levels. You can also see it's pretty much the bottom of this weekly candle here, so intraday price will react to these levels as well. When I'm looking for support and resistance, I just look for areas that have multiple, and the more the merrier, multiple confirmations of price reacting to them. So just looking at this, you can draw trend lines, so you could look at connecting high points. You could say that we've been in this channel. You can look at temporary trends. You can look at, here we have a support. As soon as we break, we break, come up, retest, sell off. You can really draw lines anywhere, and it's up to your discretion to identify where those are and what those mean to you and the importance of them. Generally, you don't want to cloud your charts with too many levels and too many things, because you'll kind of lose track of what you're looking for. So two that I've been watching is that trend line on the weekly and this resistance on the weekly. We have two opposing forces essentially. We have this big level of support and we have this big level of resistance that we have 1, 2, 3, 4, 5 touches, and we have failed to break out of that. What does that tell me, and why do I care about these levels? If we get price bouncing off this bottom trend line, this support, and it comes up and it breaks through and closes outside of this trend, you can expect following days, weeks, etc. to continue that, because we have a trend line that has been unable to be broken. Once you break it, you can expect a reaction. That's essentially what we're looking for, is areas where we've had reactions, and we either look for price to do the same thing it has in the past. So as price comes up and looks at this point, we can say, Is price rejecting off of this as it has in the past? All right, that gives you an idea that you could trade puts. Or if price approaches this level, maintains strength, breaks above that level, that gives you an indication we've just done something that we haven't been able to do in previous weeks. We've shown strength and we've broken out of this, and you can expect a continuation in most times, not always, but more often than not, that gives you confidence that that move will continue and you have strength to the upside. That's why we care about these levels, and that's why these weekly levels matter so much. Another example of this, really you can look at something like this level in here. What was that? Around 430. Come up, big rejection off of it. Come up, rejection, and close below that level. Find support once we're above it. Find support again as we come down, selling into it. Close below it, break above it, and we're back to bullish. So you find these kind of key pivotal moments, levels that have been tested multiple times. Another great example is right in here. Let's look at this. What's that? 410. You see price come down, spike, react violently off that level, bounces very, very cleanly off that level, come down, look at price, hold above that level again, break below, rejects, breaks back above, holds it below, and you can just kind of see how price has reacted to this 410 level just over time. You can see how we reject, come up, reject, break above it, find support here, continue our move back up to this next level. And it's just about finding these areas that have had a lot of price action, have a lot of movement around them. Areas that have acted at both as support and resistance are very valid levels to watch for. So high overview, we look for levels that have confluence in terms of price reacting to them, price holding above or below, depending on where price is in relation to it, gives you a strong indication that this level could get a similar reaction when we come back to it in the future. So that's what I'm looking for on the weekly chart. Just a bit of higher time frame levels that you can kind of count on. We don't want to mark every single thing. So you don't want to mark the top of this one, the top of this one, the top of this one. And while you do see some validity in that, especially over here in this consolidation, you see that those prices being respected more than once, it adds a lot of noise. So what would I do in that scenario? If I had to choose between all three of these wicks here, I would choose the very top one. Choose the extreme. And you see here that starts to make a little bit more sense. That vision that was clouded by all three lines starts to make a bit more sense. You have this high. Do these matter as much as this high? No, they don't, because this was the highest point. So what are you looking for? You're looking for price to break above that high. Look at what it does once we break above it. We get this hammer, we break above it, get this hammer candle at that level. That's really bullish. That's increasing volume as we break above and maintain above. And you can see how we react out of that with an explosion upwards. That's kind of what you want to look for. You want to look for local highs, local lows. You want to look for areas of swings. So swing highs, swing lows. This is a swing high. This is a swing low. This is a swing low. This is a swing high. Those are typically going to be levels that mean a bit more. So you can say this swing high kind of lines up with this one over here. And that just adds to the validity. The more price action, the more touches and taps that you have of those levels kind of adds validity to them, as it shows that price is attracted to those levels and reacts at those levels. That's a lot. But if you're with me, it's the same thing. We just kind of dial that in on smaller time frames. Excuse me. So this is weekly. We may say, okay, I'm really looking at this resistance, this support. We have these levels here. Great. That's weekly. Typically also pays to look at levels in relation to where we are. So price currently is in this area here, around 436. Does it matter, this level down here? No, we're not going to see 375, anytime soon. So you don't need to really pay attention to that. I would pay attention to, okay, we have this swing low here. That's relevant. We have this weekly high here from last week. That's relevant. Levels like that, things that are close to the price that you're trading at, are what you want to pay the most attention to. Longer term trends like this, those matter as well. But But really all you need to do is chart the levels kind of in the general region of where you are. Another quick note before I dive into smaller time frame, because really smaller time frame is just more of this, but on a different time. In regards to candles, there is kind of an ongoing question of, do we pay attention to the wicks or do we pay attention to the body? The thick part, the thick colored part, is the body of the candle, and the wick is this little scrawny, looks like a candle wick. This is super low level beginner stuff, but the candle represents the open and close of that time period. The wicks represent the highs and the lows of that time period. So if we take a look, and we'll look at, this is a good one. If we look at this candle right here, we opened right at this point, so the week opened here, went as high as here, as low as here, and closed here. This is the body, these are the wicks. When you're charting, should you pay attention to bodies and wicks? I think you should pay attention to both. They're both relevant. If you get a wick off a level like in here, this 410, when you see it wicking right off that level, that gives a lot of validation. But also, rightfully so, if you wick above that level but still close below it, that close means a lot. That means that you tried to push above, and you did get above for a period of time, but you got rejected right back down and respected that level. Wicks and bodies of candles both matter, and you should pay attention to both. Wicks in terms of reversal points, candle bodies in terms of where are we closing, are we maintaining price above or below a particular level, and that gives you indication of that strength of that level as well. So I pay attention to both. I chart off of wicks, and I also give validity to candle bodies closing below. So overall, I do pay attention to wicks and bodies. For example, this level here, around 430, yes, you can see we wicked up above it, but we rejected off that area. And you can see over here we wicked above it, but we closed below it. And then you can see that we support it. Here we wicked above it, but closed below it. That's all valid to me. From the top down, so we start from the weekly, then we can look at the daily. And the daily provides us more granular data that we don't really see on the weekly. For example, look at this gap here. We didn't see that on the weekly, but on the daily it's clear as day. So then you could look at, okay, well those levels are very relevant. Let's look at where price gapped from. It gapped from 438.5-ish to 436. We can mark those. That's relevant. Price usually closes gaps as we're approaching this level. That could be something that you watch. Do we close that gap? Do we close that gap and reject? Do we get above this level and continue? That's kind of what we're looking. So daily chart gives you a little bit more granularity than weekly, but still a very high level overview of some of these levels. You're looking for confirmation. Look at this level. We have 1, 2, 3, 4, 5 rejections. Then we come down. We have multiple touches of support, multiple rejections once we're above it, or below it, excuse me. Support once we're above it, rejections once we're below it. And you start to pay attention to these. It's the same thing as you go through. You can also say, okay, on the daily time frame, we have this little support line. And then you can also really pay attention to, well, we have this zone above us that we have not been able to break. You can look at this whole area. I zoomed in a little too much, but this whole zone in here, look how many times we've failed to break above that. But we have this support holding us. You can look at, do we break out of this support? Do we break above this resistance? These are kind of the levels and the zones that you should be looking at. Areas that we haven't been able to break out of. You see some consolidation. Whichever way we go generally indicates that we'll have momentum in that direction. These are higher time frame levels, so we're still on the daily. We can take a look at some of these levels and how they've played out on a smaller time frame. So you wouldn't trade off a daily, you wouldn't trade off a weekly. You might use those as reference to where price is moving overall, but you're not going to enter a trade on the daily chart. That's where you keep breaking it down. So we'll go into the 4 hour and then we'll look. And we'll say, okay, on the 4 hour, one of the first things I see is we have this consolidation. We have support from here, we have resistance from here. That gives us something to trade, right? If we break out of this, we're showing strength to the upside. If we break down below this, we're showing weakness. And you just find these more granular levels, and you look at where price is, and you look at levels in relation to that. And you just work your way down. I would mark levels all the way down to the 1 hour chart. I would do weekly, daily, 4 hour, 1 hour. Go through those, find your levels, find your trends. That's all you need to do. Some of this stuff is a lot of noise, you know? So do you mark everything? Do I mark this one and this one and this one? And you don't need to. Especially pay attention to where you get big moves, big reactions. So you can see some of the levels that we had off the daily time frame, like this 437.5. You can see that big rejection as we come up there. That's valid. So as we come up to that point again, you want to remember, okay, near this area we rejected here. That was the high of that day. That was a swing high of this day. We've had some pretty big rejections off this area. And I alluded to it earlier, but it's never just a set price, but more of an area. So you can look at what's going to happen as we approach this. Do we have a similar rejection? And you can see that we got up close to it here as well and had a rejection. But we're holding between that 436 and that trend line. And this, if we extend this a few days in the future, you see we have some things in play here. We have this level as support, we have this as resistance, we also have this trend line as resistance. Those are the things I'm looking for. Generally, you want to stick to these higher time frame levels as they mean a bit more. You know, you'll get a bigger reaction, you're able to trade them. But you can come down into the 5 minute and you can look at how price reacts to those levels, right? So this is how you get your entries. You see us coming up. We rejected earlier, you know, you could have marked that trend line. As we start to approach it, you can base your trades off that. One thing that I was watching, and it's tricky because you can look at so many different things. You can pay attention to everything. And you can get caught in kind of the small details of it. One thing I was looking at was this this bull flag that we had on the daily time frame. So we have this run up, we have this downward consolidation, and you see today we broke out of it. Why do these daily time frames matter? If you look on the 5 minute, you can see once we broke out of that, we ripped. We got that retest on the 5 minute and we made a high. We came down, we tested it and rallied again. Came down, tested it towards the after hours, rallied again. So one thing to keep in mind is when you look at a level from a daily and then you drop down to a 5 minute, they might not be as precise because you're taking a much larger level from a larger time frame and trying to dial that down into a 5 minute perspective. So that's something to keep in mind. A daily level, you might not have price react down to the very cent when you're looking at it on a 5 minute. But you can still see the way price reacted to that level. Overall, that's really it. I don't really chart anything on like 5 or 15 minutes. The only thing I might do is intraday levels. So, for example, we can look at something like this. You know, maybe I didn't have a level here from the daily time frame, but if I'm watching this on the 5 minute and I see us bouncing, you can chart that. You can say, okay, in this current day, we're showing some relevance at this level. Once we break it, you can see what happens. Likewise, you can look at trend lines. You can say, okay, we've been trending down all day. Once we break it, you get a move up to the upside. Then we start a new downtrend. You break it, you get a move to the upside. But it is important to understand the relation between the time frame that you got your levels and kind of how to trade them. A 5 minute level probably won't get the reaction that a daily level will. So you get bigger movements, bigger price reactions out of larger levels. You can get smaller scalps out of smaller levels. So if you're looking at a 5 minute time frame, and you're charting things on 5 minutes, trade that with that in mind. Don't think this 5-minute level broke, I'm going to hold for weeks, because it may not be as relevant as that. But you can pretty much say, okay, this trend line broke. We're going to get some sort of reaction in the short term, and surely enough, you do. And those are tradable things. Those are moves that you can trade, levels that you can trade. But just something to keep in mind. If it's a lower time frame level, expect a lower time frame trade. That's really it. I trade supply and resistance, or support and resistance, supply and demand, and then some chart patterns like flags, support, resistance. For example, here, I'm really screwing this up. This is a great example of an intraday level. We formed the support intraday, we broke it, and you got a big move out of that. That's nice. You can also look at, intraday resistance. We're in this channel. If we broke to the upside, you could expect a move to the upside. We're just looking at trends of price, where price has bounced before, and then look at what it reacts to that level. Does it reject? Does it break through? And that gives you an indication of how to trade that. I hope this was helpful. I kind of came into it with a bit of a plan, but I feel like I rambled a bit. Really, you just look for price swings. You can see we had a bit of resistance here. This is another great example. You can find them everywhere, and I recommend for practice just pulling up charts and just drawing lines and just looking at how things react. We have this support and we have this resistance above us. This is essentially a rising wedge. Once we break out of that consolidation, we get a move to the upside. We come down and we retest what was once resistance, that acts as support. The concepts, you can keep them really simple and they work. Obviously, they don't work all the time or else everybody would be rich, but that's just the basic concept of it. Start on a higher time frame, work your way down. You can look at consolidation or like local patterns within a day on some of these lower time frames. What I mean consolidation, if you're wondering, this will be the last thing I touch on. There's all sorts of names for price patterns and chart patterns, but when you see price coiling inside a tight range like this, look for it to break out. Once it breaks, you can expect some momentum in that direction. As I said, not always, but generally that holds true. And you can do this. You can do this on a weekly time frame. You can do this hourly. You can look at anything you want. When we look at consolidation, for example, here's a good one. Look at what price did in this pre-market. We came up and then we just kind of bounced around in this range. Once we break out of that range, you get a reaction. That holds true for a lot of time frames and for a lot of kind of trading tactics or ideas. As you look at these areas where price kind of tightens and squeezes, and you look for a breakout of it. Here you can see price is really stuck in this range in here. When we finally break out, you get a big move. Just some principal ideas or things that you can look for intraday as well. That's all I have for you. I hope I did a decent job explaining how I find levels. Really, I trade support and resistance, look for swing highs, swing lows, areas of importance. Once you do it, you'll start to pick it up quicker. You can just look at a chart and start to say, okay, I see a level here. I see a trend line forming here. You can start to understand and get an idea of how price works, how you can chart it, what to watch for, what levels to pay attention to, what levels don't mean as much. But that's it, really. Support and resistance, some trend lines, a few chart patterns, look for consolidation and breaking out of ranges. But that's how I find my levels. I also will say this, I'll end it on this. Whole numbers, pay attention to them. Sometimes you'll chart these levels and you'll notice, wow, that's right around a perfect whole number, 420, let's say. Or let's just look at whatever this level is, 430, pretty much 433 on the dot. What about this one? 430 or 443, you know, a little off. But more often than not, you'll notice that these levels coincide with whole numbers, right around 453, for example. And if you think of people setting and selling, buying and selling stocks, they're generally going to set orders. You know, I'll buy at 440. I'll buy at $400. Unlikely that they'll buy at $440.37. Doesn't mean they won't, but whole numbers hold weight. And so when you get a key level and it lines up with a nice whole number, pay attention to that because they do usually play out. That's all I have, though. I appreciate you watching. It's a bit of a rant, bit of a ramble. Like I said, I hope you got something out of it. I hope it was useful. If you still have more questions, feel free to leave them on this video. I'll try to elaborate more. I do trade live Monday through Friday, so if you want to stop by and check that out, we'd love to have you. We also have a free Discord. If you want to join, just send me a message or leave a comment, and we'll get you that link to join the Discord. It's free. It's just a small group of traders, people learning and growing together. We share ideas. Sometimes we hop in chats while we're trading and discuss what we're seeing in the markets. Some people watch, you know, SPY. Some people watch individual names like Apple. We have kind of different varying experiences, account sizes, etc. Anybody's welcome as long as you're just looking to level up, just wanting to be around like-minded people, learning to trade and grow together. Like I said, if you want to join that, if that sounds interesting, just leave a comment and I'll get you that link. Thank you so much for watching. I appreciate you. That's all I have, and I hope you have a great day. Bye.